and we'll move on now to Goldfields. So we're very lucky to have with us today Chris Griffith, who's the CEO. He was appointed CEO back in April 2021, and before his appointment he was the CEO of Anglo American Platinum between September 2012 and April 2020, and CEO of Kumba Iron Ore from 2008 to 2012. And prior to that, he was Anglo American Platinum's head of joint ventures. So with that brief introduction, I'll hand it over to Chris.
Great, thanks for that introduction, Brett. Hi, good morning to you all, ladies and gentlemen. So as Brett said, my name is Chris Griffith and I'm the CEO of Goldfields. As always, we first draw your attention to the disclaimer and the forward-looking statements. So given that Goldfields is not listed on the Australian Stock Exchange, many of you perhaps don't know Goldfields. So a little bit of an overview for us and what our presence in Australia is. And this slide I'll embellish on later in the presentation, all of the points that we make here. First of all, Australia forms the cornerstone of Goldfields' global portfolio. We produce about 1 million ounces of gold per annum here in Australia. It's 42% of the group's production, 51% of the group's cash flow. We have a high-quality set of assets, the lowest all-in cost gold producer in Australia, with a strong track record of delivery. We continue to unlock value through brownfields exploration, spending about 80 million to 100 million Aussie dollars a year in exploration, and that has meant that we've been able to continue both replacing the reserves that we've mined and growing our reserve and resource base, with a life of mine well in excess for all of our operations beyond 10 years. In addition to that, here in Australia, we are setting the benchmark in ESG performance, something I look forward to telling you a bit more about in the subsequent slides. On this slide, what you can see is just how, first of all, for those of you who don't know Goldfields, if you look at the top right-hand side box, you can see that our group, we have 9 mines, one project very close to completion in Chile, operating in 5 different countries, with attributable production of 2.34 million ounces at an all-in cost of $1,297 US dollars an ounce, and that includes the spend of our major project in Chile, Solaris Norte. With mine net cash flow of $900 million, with free cash flow of $460 million US dollars. If you have a look at the chart, you can see how Australia features. You can see the 4 mines in Australia, St. Ives, Granny Smith, Agnew, and Gruyere, with attributable production, as I mentioned, just over 1 million ounces. This is all 2021 numbers. In Australia, all-in cost at $1,146 US dollars an ounce. You can see as well, we produce in South Africa and Ghana. The combination of those two is just over 1 million ounces. And then we produce 1 mine in Cerro Corona in Peru, and our 1 project, as I mentioned, Solaris Norte, which is due to come on stream at the end of Q1 in 2023. Just briefly on Solaris, because I won't touch on it again, this is a project that's going to deliver all-in sustaining cost of under $550 an ounce. Is going to produce in its first full year of production, 600,000 ounces for 2 years, and then will average 450,000 ounces of gold produced per annum for the next 11 years. What you see on the top chart here, again, for those who don't know Goldfields, so we're the 4th largest producer in Australia. If you look at the bottom chart, what you can see in Australia, it's quite interesting when you look at both all-in sustaining cost and all-in cost, and there's a variety of ways in which producers share their all-in sustaining cost and all-in cost numbers. What you can see on the very left-hand side is Goldfields, the lowest all-in cost producer in Australia. Pretty much all of our exploration capital gets included in our all-in sustaining cost number, leaving only a very small component of costs that form the all-in cost number. So you can see what that looks like across the gold producers in Australia. What you can see is Gold Fields have very high quality assets generating very good cash flow for the company. I mentioned that we have had 6 years of very strong delivery, both in production and in all-in cost have met all guidance for every single one of those years over the last 6 years. This chart shows when we bought the assets, so the top box on the left-hand side, what you can see when we bought the St. Ives and Agnew mine in 2002, and then the Granny Smith mine in 2012 or 2013, what you can see is we had about 3.5 million ounces of production of reserves in million ounces. What you can see then, we produced over 16 million ounces since we have acquired those mines. And now we have increased the reserve from when we bought those to over 5 million ounces. So what you can see that we have had a reserve multiplier as a result of continuous exploration spend in Australia of between 80 and 100 million Aussie dollars. You can see that we have had a reserve multiplier of between 4, 7, 5 times. So we've had a fantastic exploration success, brownfields exploration success at all of our mines in Australia. If you then take that back to the bottom chart, if you take that the reserve of 2021, and I know most of the folk here in Australia understand that what in these orogenic ore bodies, as you sort of drill for the next phase as you get down there, in the rest of the world that's not that common, and most of the analysts in the rest of the world will take your reserve life divided by your annual production and equate that to your life of mine. So we use this slide, and I guess most of the folk here will understand this, but we use this outside of Australia. Canada's a little bit like Australia as well, they understand this. But if you look at our annual production, look at our reserve life, but then look at resources, and assuming we only convert between, let's say, 50% of the resource to reserve, we'll have somewhere between 10 and 20 years life of mine at all of our Australian assets. And that's the way to think about valuation of Australian gold mines. Just a couple of snapshots to give you a feel what that looks like. So you can see this is St. Ives, just the invincible portion of St. Ives. It excludes the Neptune open pit, excludes Hamlet. What you can see here at Invincible North, Invincible South, you can see it's open all the way below this. We've already drilled, we understand where the ore body is, and you can see that when we say at St. Ives we'll have a 20-year life of mine, it's because of the information we've got. Of course, you don't want to try and drill that lower level ore body all the way from surface. So what you do is as you get down to the lower levels, that's where we drill for the next tranche of life at our operations. And at Agnew, which looks on the face of it to be our shortest life operation. However, if you see here what previously was just that central section, that gray section, which was the Cath ore body, what you can see is we've moved to your left-hand side of the slide, the Cath Extension and the Warringo North extensions. You can see that we're finding more ore bodies, and all of those ore bodies extend at depth. Also, a new zone is opening up at Agnew as well, and all of this in time to come will become part of the resource and reserve of Agnew. What you see on the very left-hand side is the Barren Lands open pit, so a new area, and the Barren Lands underground, and that'll connect to a new area as well, which is the Redeemer North area, which is a new lode or a new ore body next to the old Redeemer complex. So just as part of the exploration spend that we continue to spend in Australia, we continue to find both extensions at depth and new extensions of our ore bodies at the mines here. And then I mentioned that we think, first of all, Gold Fields punches well above its weight when it comes to ESG. We regularly get ranked in the top 3, so ESG performance globally, all miners. And when we have a look at the Australian component, which I'll show you in the next few slides, you can see how well the team here in Australia are doing. We announced our 2030 ESG targets, not just decarbonisation, at the end of last year. It does form decarbonisation clearly a very important part of our ESG targets. Because of the growth of the company, when we started our ESG journey in 2016, because of the growth of the company, to take a net reduction of 30% for Goldfields by 2030, because of the growth of the company, we have to have a 50% carbon reduction or emission reduction to be able to get to net 30. I'll show you what that looks like on the following slide. We also have a net zero, like many of the mining companies, by 2050. On tailings management, we continue to conform to the global industry standard on tailings management and have an aspiration to reduce the number of upstream tailings dams. On water, we have targets to recycle 80% of all the water we use globally by 2030 and reducing the freshwater usage by 45% from a 2018 baseline. You can see it's a little bit different to the 2016 baseline for decarbonisation. That's just at different times when we started the journey, and 2018 was when the ICMM started targeting and sort of clarified for the industry what the water targets should be. On safety, health, and environment, you won't be surprised to see that the aspiration clearly is to have no person hurt or injured in any of our operations. A couple of years back in 2015, we had 15% women in our business. That stands currently at 22%, and we have an aspiration to get to 30% women representation across our business globally. That doesn't sound like so much. For us to get to that number means that we have to, of every batch of folk we recruit for the next 8 years to 2020, 45% of those have to be women to make a 30% representation by then. And then stakeholder value creation. Our aspiration is, in a growing business, to continue to have 30% of the value that we create benefiting local and host communities. We also have an aspiration to have flagship projects that benefit. So these are multi-generational flagship projects in communities, to have 6 of those by 2030. So I'll just go into a little bit more detail on just one of those components, and that's decarbonisation. On our website, you can see what that looks like for all the rest of those 6 buckets of targets. This is the 2030 targets for decarbonisation. I mentioned to you that to get 30% net emission reduction, we've got to be able to reduce by 50%. Some key developments that we've had since we announced these targets at the end of last year. We're currently on track with the 50 megawatt solar plant in our mine in South Africa at South Deep. We have just increased that license to go to 60 megawatts. At Gruyere here in Australia, last month we committed, given that it's now 2 days into August, we have to say it's last month we commissioned the 12 megawatt solar plant at Gruyere. And since the beginning of the year, we've now converted all of our power at our mine in Peru to renewables, so with hydropower. So all of our energy that we use at Gruyere, or primary energy that we use at Gruyere, is now renewables. And then we have 3 of our mines already registered or certified to ISO 50001, the energy standard, and all the rest of our mines will be certified 50001 by the end of next year. So I won't, this is a scary chart, but I just want to draw your attention to a few numbers. And the reason we show this chart is because many folk look at mining companies and saying, well, we're waving our arms and quoting 2030 or quoting 2050 numbers. This is to demonstrate that we have a line of sight of where all of that happens. So for example, on the very left-hand side chart, you can see that in 2016, we produced just under 1,700 kilotons of CO2. With the growth in the business to 2.8 million ounces, that number by 2030 will grow to 2.4 or 2,400 kilotons of CO2. So we've got a trajectory in renewables where we think the lowest hanging fruit is to invest in all of those mines. Plus we have about a 20% target of our fleet to be electrified. And then we've got some efficiency targets. So when you add that all up, you see we still don't quite get to a 50% reduction, and we've had to target more abatement at a number of our mines, and those are the additional abatements. So for example, South Deep, you can see by 2030 has to have 100% of its primary power coming from renewables. And so we get to a 2030 target of 1,185. So that's about a 35% net reduction, or over 50%. So we've got a little bit of fat there for perhaps if some of those projects don't quite come off as we intended them to. So what does that look like in Australia? And we think our Australian team are doing a fantastic job, certainly leading our operations in Goldfields, but also have got lots of recognition for leading the mining industry here in Australia. So if you look at the three mines, we first started on the left-hand side at Granny Smith. That was our first big renewables project. That's an 8 megawatt solar, 2 megawatt battery storage, 35 megawatts of gas. We invested $17 million there. And we now have a 10%, just under 10% of the primary energy that we use at Granny Smith comes from renewables. And so that was our first one in partnership with Aggreko. Then we moved to a much bigger plant at Agnew. And you can see again, I think this talks to the life of mine that we see at Agnew, because we wouldn't be investing in 10, 15 years worth of renewables if we didn't believe in the long-term viability of that operation. So we invested in a 16 megawatt wind, 4 megawatt solar, and 13 megawatt battery storage with some gas and diesel. So a great project that we have at Agnew. It certainly makes a big difference for those that work there. They believe in the company's purpose of creating value beyond mining. We run generally at about 54% of our energy. On good days when the sun's shining and the wind's blowing, then we get up to 80% of the power that we use is renewables. And likewise, I mentioned already, Gruyere we commissioned that in this past month, a 12 megawatt solar and 4 megawatt battery storage plant. I mentioned that electric vehicles will only form about 20% of the decarbonization or the reduction in emissions over the next 10 years. We have, however, started with a number of electric vehicles. You can see this is the electric loader and truck at St. Ives. We've got another set coming in at South Deep in South Africa during the course of this year. I think all the text on the right-hand side says, this is early stage, still costing about twice as much capital to get electrification on vehicles. Some of it, when it's going, it works well. Clearly, some of it, when it takes 2 trips, and then you need to recharge it again, demonstrates that this is clearly still work in progress. And then for those of you who may have been watching Goldfields, as I just move off Australia for a moment, you may see that we're in the process of acquiring Yamana Gold. It's a 1 million ounce producer in Canada and the South Americas. And some of you may have seen that, but that's work in progress that we're looking to get shareholder approval for the circulars out in September and approval in October. Just a little bit about what Yamana is about and why Yamana for Goldfields. So Goldfields has had a strategy and a history of investing in mines across the world, and we're in a really, really good position for, strategy-wise for the company. Over the next 3 years, with the delivery of Solaris Norte, the Goldfields group grows by another 20%. So on the face of it, that looks like a great position for a company to be. One of the things, though, that Goldfields, after we hit a peak of, once we hit a peak of 2.8 million ounces, we start dropping off production in some of our other operations. And internally, we no longer have the internal options to be able to replace and grow our portfolio of assets. So we think preemptively and proactively we are investing in the next generation of Goldfields. So from a position of strength, this is the reason that we've looked at Yamana. Yamana is a great set of complementary assets, both in the regions that we operate in South America, but we're also adding Canada as a premier mining jurisdiction. The assets talk very much to the type of assets that we mine in our group. We think both with our financial capability and our technical capability, we can add value to the Yamana assets that they wouldn't be able to add by themselves. And then lastly, whilst it wasn't one of the objectives of the company to grow in scale, we do then become competitive in the top 3 gold producers globally. We certainly didn't target scale. We targeted on the left-hand side asset quality, given that we have put together a portfolio of assets of high quality jurisdictions, but we're looking to create whatever we buy and whatever we merge with to improve the asset quality, improve the cash flows, match at least our jurisdictional quality across the globe, strengthen the pipeline. I mentioned that we no longer have options internally for replacement and growth. And then the things that we're good at is what we wanted to have more of. And then lastly, we didn't want to go backwards or acquire assets that would take us backwards on our commitment to ESG. On the right-hand side, you can see many of the reasons why Yamana's assets tick those boxes. We get into Canada with one of the top 10 global gold mines. Jacobino's the lowest cost gold producer in the South Americas. And I don't have time to go through the rest of it, but you can see we get then quality jurisdictions, quality cash flow going forward, and a number of projects that over time we can, in the same way we have disciplined investment over many years, will continue to do that going forward with a number of both greenfields and brownfields exploration opportunities that come with the portfolio of Yamana assets. If you look at where we produce, we'll add the 2 companies together. On 2021 numbers, we'll go to 3.4 million ounces. If by the time Solaris comes on, we'll be a 4 million ounce producer with a potential to optimize the portfolio with potential asset sales to run somewhere between 3.5 and 4 million ounces. Again, this is just a slide that shows that when you look on the very left-hand side and you look at what we can bring to those to the Yamana assets, and we run down where it says Goldfields, and you can see how in many of those boxes our Australian assets feature, given the skill that we have in both open pit and underground mines, and many of the ore bodies that we mine here in Australia are very similar to ore bodies that come with the Yamana assets. So again, talking to the technical expertise we can bring to the Yamana assets. And then lastly, to demonstrate to you, this is the Canadian Malartic ore body, one of the 10 best gold mines globally. It's the same type of ore body that we mine underground here in Australia at 3 of our underground mines. So we can bring that skill and expertise that we have to our joint venture partners in Australia. So with that, ladies and gents, I know there's not much time, there's about 2 minutes left, but with that, ladies and gents, thanks very much for the opportunity to talk to you this morning. Thanks.
All right, I think we probably have just a moment for perhaps one question. We're running up on time, but I see one down the front here. Have we got a mic? Otherwise, we'll just pause for a second. Otherwise, stand up. It's coming down now.
I've just got straightforward one question. Given what's happening in Australia with Chalice and Julimar and your Amplats background, may Goldfields diversify into PGs?
Yeah, it's a great question. At this point in time, we're not looking to diversify into platinum group metals. The thing about platinum group metals is that the investment into the processing technology normally comes with very, very big numbers. and the big PGM producers have all got the smelters, the refineries, and the base metal producers. So at this point in time, that's not something we're looking at. What we are looking at in some of the projects that we've got in the South Americas come with additional silver and come with additional copper. So we will be diversifying still into gold-producing assets, but with some further diversification of copper and silver, which still keeps our focus as a gold producer. At this point in time, we're not thinking of producing platinum group metals. But who knows?
Wonderful. Thank you very much.
Thanks very much.
Thank you, Chris.
Cheers. Bye-bye.